Thank you, everyone, and what amazing discussions we've seen here today. It's exciting to be all in the same room again here in Melbourne and to have these fascinating discussions. Investment in the Australian food sector to enable it to grow and feed that growing world population certainly isn't a black and white issue. We've just had these discussions today. It takes in global disruption, it takes in food security, and not to mention what we're seeing with the escalating trade war, and the US, which is one of our biggest markets for Australian agri-goods, but also one of our most significant investors in terms of the Australian farming and food space. You think about a lot of the North American pension funds that have invested here in Australia. You think about a lot of the agri multinationals that have investments here in Australia. So with the US on the brink of a recession, it's an interesting time to have this chat. Michael, we might start with you. You're the former chairman of the Productivity Commission. You've worked closely with Treasury, federal, state governments. Given the events of recent weeks and months, how much strife are we in from an investment point of view?
Yeah, well, potentially, I think it is very serious. I think that all eyes in the next little while will be on a few key commodities, including beef. As reflected in other panels and by the Minister, of course, in the melee, in the skirmish, there will be little opportunities that emerge, maybe more than little opportunities, including the Chinese retaliatory tariffs and other things. But I think overwhelmingly, as reflected in the previous conversation, Australia does well in a rules-based order. It doesn't do well in a power-based arm wrestle. The Australian economy, a long Australian economic history suggests that we do very well in periods where the world is open and global trade is expanding. That was true in the middle part of the 19th century. It was true in the post-war period with the rise of Japan, and it's been true in the last 30 years. We haven't done well in times of protectionism and isolation. And so I think in general, both from a broad economic point of view, but also specifically for agriculture, it's potentially quite problematic. I mean, the thing about Australian agriculture is we're a middling producer of many things, but a big exporter. That creates vulnerability when the trade channel is compromised. But it's also, of course, the thing that makes us great. And, the flip side is that the fundamentals of Australian agriculture are incredibly strong. It's been the star performer in terms of productivity growth over the last 30 years in the Australian economy. And I would contend that that is all about the fact that it's a globally oriented, lacking in subsidy, price controls, quotas, that sort of thing. It's a highly globalised industry, and I think that's what drives its underlying strength.
Yeah, but Impact Ag obviously has investments in the farming space, both here in Australia and in America, which you oversee there. What are you hearing on the ground? What would a potential recession in America mean for Aussie Ag?
Yeah, well, it's interesting. I speak to my colleagues in New York all the time, of course, and just based on the news, I think everyone's still a little bit in shock. It's too early to kind of jump to conclusions with what's happening between, the US, Canada, US, Mexico. When I talk to them about the impact on inflation and as a result of the trade war, they talk to me about the fact that the US economy is so big, it can absorb a certain amount of inflation. And so just right now, there is, no major panic until they see where this all drops. I mean, I think one thing that's interesting that caught my eye was with the aluminium tariffs and steel tariffs with Canada. And there was an article, I think, in the Wall Street Journal that was talking about, the highest selling pickup trucks in the US is the F-150. And the F-150 uses a lot of aluminium. Yep. And they'd done the calculations, and the increase in cost in an F-150 due to just the aluminium was $400. Yeah, right. So $400 on a $70,000 vehicle is not huge. So, I mean, I think it's a bit early. We just got to wait and see.
Yeah. Jacqueline, keen for your views from the transactional space. North American pension funds, in particular, are a big investor in Aussie Ag. Is this where the money's still coming from? Do you anticipate any change as these trade winds blow?
Yeah, we certainly haven't seen any change at this stage, James, from the North American pension funds. They are still expressing interest in all of the transactions that we are running at the moment. But we are also starting to see capital from other parts of the globe either enter or re-enter the market. So the Middle East, Europe and China as well are coming back into our market, which is quite interesting.
So China's been out for quite some time.
They have been out for quite some time, but yes, certainly a number of the processes we've been running more recently, they have started to express interest.
And what areas are they looking at? Is it a food security type situation?
Yeah, largely, yeah. So they are looking for offtake, particularly in the beef sector, is what we're seeing at the moment, and a little bit in horticulture.
Yeah, rightio. Michael, globally, what are you seeing as trends in ag?
I think there's a continuation of the long-term secular shift in favour of more corporate and more institutional investment. I think particularly in Australia, I don't know the extent to which it's replicated elsewhere, but one thing I find interesting is the shift in the share of the R&D spend in particular that's now private as opposed to public. I mean, Australia's had a long history of publicly supported R&D through the Rural R&D Corps, CSIRO, universities, state ag departments, that sort of thing. That's been a highly effective form of or model of innovation for the farm sector. But increasingly the rate of growth in private R&D, particularly around adoption of technology, sensors, precision agriculture, that it seems to be a pretty significant trend, such that as an overall share of the R&D bucket, the private sector's not quite half, but it's growing pretty rapidly.
Yeah, rightio. Jack, what's currently driving transactions in the Australian ag and food sector? Like, how much is it slowing? Is it picking up? We saw those 3 years, during that COVID period where we had those perfect storm align with interest rates and season and strong commodity prices. We're on the flip side of that now. How are things tracking?
Really well. So 2025 has started off exceptionally well in the transaction sector. We're seeing quite a bit of activity compared to last year, which was a little bit more subdued. From a seller perspective, in terms of what's driving activity, at the smaller end of the market, succession continues to be a key driver of transaction activity. At the larger end of the market, we are seeing some of the funds who came in 5 to 7 years ago coming to the end of the life of those funds, and so they're looking to crystallise some of the gains that they've made. So that's starting to drive a lot of activity. Some potential changes in tax legislation is also driving activity around capital gains. From a buyer perspective, in terms of what's driving transaction activity or what's bringing people into processes, is obviously interest rates, and interest rates coming off slightly, and it's likely that they will come off a little bit more. I think inflation now, people are largely, I wouldn't say comfortable with it, but are now budgeting for where we're at in the inflationary environment that we're in. And so, yeah, we do have a lot of competitiveness in the processes that we're running at the moment compared to what we saw last year.
So what sectors or geographies are they looking at? Like, if I had $100 million, which for the record I don't, where would I be investing in Australian ag?
Yeah, you should have for what we pay you in advertising.
Yeah, absolutely.
I'll give you a frustrating advisor response, and that's it depends. It depends on what you're looking for.
Yeah.
Are you looking for cash yield? Are you looking for a long-term investment? Are you looking for a short-term investment? Do you want a passive investment? Do you want to be quite active in that investment? But if I had to provide a generalist overview of what, or I guess where we've seen, a lot of interest in some of the processes we've run more recently, is anything on the East Coast that has scale and has water is certainly, where we're seeing a lot of interest at the moment.
Permanent plantings?
Not
so much?
Not so much permanent plantings. Cotton is certainly, there's quite a bit of demand for cotton at the moment, but mixed farming in particular. People want diversity. They don't necessarily want to be exposed to just one commodity at the moment, and also any assets that still have some further development upside as well, so they can capture development margin on the exit.
Yeah. And before I leave you alone for a bit, a lot of family farms expanded. With that period we spoke about, over COVID, where that perfect storm aligned, a lot of families, took that once-in-a-generation opportunity to really kind of ramp things up, with the season and the interest rates and the commodity prices. Is there distress in the market at the moment?
There is, James, and I would say that we're probably seeing more distress at the moment than what we've seen in the last 10 years. And I think that's largely driven by, or anyone that was particularly highly leveraged before interest rate rises and inflation took a grip. That's been really difficult to recover from. So we have seen quite a bit of distress and both formal and informal appointments.
Is that the banks coming?
Not just the banks. So we're also seeing appointments from the ATO, and we've also seen appointments from seasonal finance, stock finance groups as well. So yeah, again, where people have probably just extended themselves a little bit too far and not being able to keep up with interest rate and inflation growth.
Bert, keen to get your perception on this. Are we seeing more international capital kind of with environmental or sustainability mandates attached, and how will this shape investment kind of going forward?
Yeah, well, it kind of, I think the answer is yes, and kind of backed up by our thesis with Agriculture as a Natural Solution Corp that we did the deal here for the AFA assets. That thesis is all around agriculture as a nature-based solution that can address climate change. And so our investors were all about, how can we have good diversified revenue streams, all the things that Jack mentioned, what investors are looking for. And on top of that, where's the carbon opportunities, renewable opportunities, biodiversity? That's really what that thesis was. And that's where we're seeing more and more opportunity. I think the European market and European capital are very attracted to those kind of more green investments and how the role that ag can play in that. And they've got pretty, tight KPIs around delivery on those, and that comes into our performance is measured by some of those green KPIs as well. So that's, perfect for us, and I think you'll continue to see more of that.
Yeah. And just to follow up there, one of the deals you were involved in the past 12 months was that $780 million sale of the Australian Food and Agriculture portfolio, which includes that iconic, Bunnock and Wanganella properties in the Riverina, which we all know and love. Talk us through that process of that deal and what made that portfolio attractive to investors.
Yeah, so under the Special Purpose Acquisition Corporation, we co-sponsored, listed on the NASDAQ. Again, our thesis was all about ag as a nature-based solution. And so for us, that whole deal was around, it was attractive because we looked at over 100 assets between South America, North America and Australia. AFA rose to the top because of the real assets, so the diversification of the real assets, the water assets, climate change hedge using geography. And then, as I was saying before, the brands behind the sheep studs, what could we do with that? We've got some ambitions around doing more wool scouring and processing in Australia, so investing in that. And then again, taking on, environmental planting, soil carbon opportunities, renewable opportunities. We could do it all by buying one company. And so that's kind of the first step in our real ambitions to build a $20 billion company. AFA is just acquisition number one, and then we will find other mergers that we can layer on that in pretty quick succession off the back of that.
Michael, we talk about, the need for sustainability and all that kind of stuff in the rural property space. Europe's strict environmental kind of health standards are soon going to apply for a lot of imports from Australia to Europe. We're talking chemical uses, animal welfare, etc. With their new 5-year blueprint for farming. How do you see factors such as that kind of play into investment from Europe in Australian farming?
Yeah, I'm not too sure about how strong an investment theme that'll be for inbound investment. I mean, I'm a bit cynical about what motivates a lot of this. I think there's a certain logic to, aspects of the European policy suite, like carbon border adjustments and whatnot. If you have got your own pricing mechanism for carbon and others don't, then, it's not crazy to impose that at the border. But a lot of this stuff, in respect of effectively trying to replicate European-style regulation in the domestic market and kind of effectively imposing that on imported product, I think is essentially motivated by protectionism, and it's essentially a concession that the EU and its member states have over-regulated, if anything. And I think if you step right back, I think that's going to prove self-defeating with time. you know, leaving aside the craziness of the current moment in United States economic policy, there's also a big picture issue that doesn't get talked about enough, I think, which is that whereas 20 or 30 years ago it was still possible to kind of convince oneself that Europe had a winning economic model, perhaps superior to that of the United States. I just don't think you can make that case now. The divergence in economic performance is too great. And, so I think that's going to be an ongoing challenge for the EU and its member states. So ultimately, cold comfort for those trying to export into the European market. But I think these measures ultimately will be self-defeating.
What are the biggest barriers preventing investment in Australian ag? Jack, we'll go straight to you. Sorry.
I touched on it earlier, James. I would say one of the biggest barriers from a foreign investment perspective at the moment is some of our tax legislation. It can be quite complex. It can be quite expensive to get in and out of assets and along the way. I think one of the other barriers can also be finding suitable management to manage the assets and manage them effectively. And so we are often approached when we're running sale processes by particularly new pools of capital coming into Australia and those, I guess, capital sources wanting to know who's going to run these assets for them. So I would say that would probably be the biggest challenges at the moment that we're seeing.
Yeah, Bert, what do you think? What do you think as an investor?
I think that Jack's really summed it up. I mean, the other thing is there is pros as well as cons, but we're just a long way away.
Yep.
We're a long way from Europe and a long way from the US, and that is, it mightn't seem that way, but it is a challenge. I mean, we've got investors that come here only every 2 years, and they're only here for 4 days, and it's just a whirlwind tour, right? And that is a bit of a barrier. I mean, you're right around the taxes. There's the FIRB issue, there's the Queensland land tax, which is a bit of a challenge as well, which we'd like to see the Queensland government change. But besides that, I mean, the opportunities are, we're still relatively on a per acre basis from land value, still really good value globally. Even our water, a regulated carbon market, regulated water market, like they're the kind of envy of the world in many ways. So capital's still going to come, the right type of capital. We just want it to be long dated and we want it to be here for a while.
Foreign Investment Review Board copped a bit of criticism during COVID for obviously, the length of the delays getting approvals through, but also the huge increase in costs. Is that a barrier?
Well, the increase in cost is, depending on the size of the deal, it can be significant. And it's kind
what
of...
What about the $780 million deal?
Well, but, there's complexity too there. And in some ways, it's not just the cost of the administration fee, it's the legal work and the legal cost that goes into it and the time. So that's not the total cost, but it is a bit of a barrier for some.
Yeah, and how are you funding FIRB, Jack?
Excellent. Yeah, couldn't fault them at the moment. We're seeing transactions go through as quickly as sort of 3 and 4 weeks at the moment. So, couldn't fault them at the moment.
It's got a lot better.
Has it?
Yeah.
Great. Michael, we're sitting here, it's Global Food Forum 2050, and I might have my $100 million by then. What do you think are the issues that we'll be discussing, and what do governments need to do to kind of help us get there?
It's probably an unfashionable thing to say because I think there's a lot of call for big bang reform and a lot of expressed disappointment about the timidity of Australian policymakers. But I'm not sure that that's what it's really all about. I think ultimately it's going to be about the stability of policy, kind of no surprises, and particularly in the choppy waters that we now confront, sort of avoiding bad moves. Avoiding mistakes that's a big part of what good policy amounts to. So I would say, if we had a degree of stability in areas, overall regulatory policy in relation to climate transition, in relation to things like water and buybacks, and I would say probably just a slightly more permissive stance on foreign investment. I think, we've gotten elements. I think it's kind of stabilised from where it was at 8 or 9 years ago, where there was kind of quite a seismic shift in Australia's foreign investment stance. We're still left with a slightly clunky regulatory regime, I think, with it sitting in the Treasury and a lot of approvals with conditions and that sort of thing. So I think, cleaning up some of that regulatory stuff. But I think a lot of it will be about our outward engagement, market access, and, as I say, avoiding dumb moves.
Absolutely. Well, we'll see you then. Global Food Forum 2050. Thank you very much to our panel for a very insightful discussion this afternoon.
Thanks.
Thank you.